Today, Square IPO'd, and I'm here with Katie Roof to talk about it. So, what happened?
So yeah, this has been one of those long anticipated IPOs. They priced last night at $9, and they've been doing really well in the public markets today, but that also means they left money on the table. So It's one of those things where it's either the retail investors get lucky or the company could have made more money by raising more money last night. So
an exciting day for Jack Dorsey, his 39th birthday. His mom rang the opening bell and then made a purchase with the first seller on Square's platform. The theatrics were very nice. A lot of people made some money. We'll get to that. But so the ins and outs, like you mentioned, it was good. Is it good? Is it bad? Is it going to take weeks to kind of suss out how it went?
Is it good or is it bad? That's quite the controversy right now in Silicon Valley, right? Because on the one hand, yes, I mean, they were just maybe a 6-year-old company, 6.5-year-old company, and they have created a lot of value in a short period of time. However, they did raise money at a $6 billion valuation, and their market cap is significantly below that right now. So that means that some investors, not all of them, because they had a special ratchet built in. It gets complicated here, but yeah, some of the investors lost or bought shares expecting Square to be worth more than it was. But yeah, so now what the ratchet is now this gets a little fancy, but some investors had something built in into their agreement where they were guaranteed certain returns and guaranteed liquidation preferences, which means that they get paid first before the other investors. So even if Square didn't do well, and even though Square is not at the value that they bought shares at, they're still doing okay. So, interesting. Tricky stuff here.
Are there people who are mad, the earlier investors, because of this? Are they like, what about us?
Yeah, I've talked to some early investors just in general about, because this isn't just Square that's doing this sort of thing. We're now seeing this at some of these other high valuation late stage companies where investors say, hey, I'm only going to get shares at like your ridiculous valuation if you promise me that I'm not going to lose money here. So, and it's not a promise. I mean, if Square were to just completely go bust, they would have lost money. But so early investors say, that they're used to that actually, that this is just part of the game. You get in early, you get more returns anyways, so they're just not paid first.
Got it. So right about now they're trading at over $13. That's good. So I'm just going to go to some quick numbers to see how some people made out. Jack Dorsey, $277 million on the IPO. Coastal Ventures, $201 million. James Morgan McKelvey, $108 million.
And he's a co-founder.
Right. Traverse, $63.3 million. Sequoia, $62.6. So those people are happy, right?
Yeah. Oh, yeah. I mean, don't get me wrong. Anyone who got in early, anyone who got Square shares when they were just a baby company, I mean, whatever their valuation is, even if it's just $4 billion, $4 billion is a lot more than zero. So if you got it when they started from nothing, you're doing really, really well.
Well, so we're just going to have to wait and see how it goes, and they'll keep processing payments and pushing out business software and all kinds of stuff.
Yeah, and I think they're going to just have to keep innovating. I saw an interview today where the CFO said that they're more than just a payments business. Actually, they've introduced merchant cash advances. They acquired Caviar, the delivery startup, and they are just trying to be all things small business. That's their idea here. They even have something called Square Cash, which is a Venmo competitor, peer-to-peer payments, but they're just trying to make it so that they're not just relying on their core swiping business, their credit card swiping business that they use at small businesses.
That's the recap, and we'll see what happens.